You guys voted on my most recent poll and said that you wanted a video about the best US stocks to buy now. So that's exactly what we're going to do today. I'm going to share 3 stocks that I think are worth looking into as potential investment opportunities. But remember, this is not financial advice. This video and this whole channel is to bring you investment opportunities for you then to take away, do your own research and make your own decisions about. Do let me know in the comments if you already own any of these stocks or you're looking to add any soon. Without further ado, let's jump in to stock number 1. Now this stock is not one, and I'll be transparent with you, that I've ever really been that interested in as an investment opportunity. Now I absolutely love this company as a consumer, but as an investor, it's never really been on my radar up until recently. Now it's looking a lot more interesting. That stock is Netflix. I think Netflix is positioned very, very strongly for 2024, and there are 6 or so reasons as to why I think this. So let's just run through these and let me know if you disagree or agree with any of these as we go. Number 1 is that they recently had very, very strong earnings, and they actually announced that they had 260.8 million paid subscribers, which is a new record for them. Number 2 is that they raised their prices, and now they are offering tiered pricing strategies whereby you can opt to have the lower price tier, but you will have to have ads when you are using their service. Now, I was thinking that when they announced this, they would see loads and loads of users cancelling their memberships, but actually, people didn't really cancel at all. The crazy thing is that so many people opted to actually sign up to, and we'll get to why they had to sign up if they weren't already paying users in just a second, but they opted to sign up to or switch to the ad tier. And even though this is the lower pricing tier for Netflix, it is a real benefit to Netflix, because what it means is that now that they have more users on the ad tier, that then means companies will want to pay Netflix to have their company advertised on Netflix because there's more eyes on it now, because there's more members using the ad tier. This then means Netflix have somewhat of a pricing power and can actually up the rates that they charge for people, for companies to advertise on Netflix. It's a win-win. Number 3, which links to the previous one, is that they have stopped the sharing accounts ability. This means you can no longer share your passwords with other people, meaning users can no longer piggyback off their parents' account or their friends' accounts. Now, I thought this was so risky for Netflix. I thought for sure people would just abort Netflix, they would go elsewhere, they would cancel their membership because they didn't want to pay. But actually, it was genius. It really was. It worked out so well for Netflix. And what it's actually done is it's meant that more people than ever have started paying, have become a member of Netflix, have started paying for the service than ever before. And that is because people decided when they found out this information, they couldn't live without Netflix. As silly as that sounds, they could not live without Netflix. They absolutely needed access to this service and they would pay to do so. This meant that Netflix were able to add 9 million paying subscribers in that quarter, which is absolutely nuts. Number 4 is competition. Now, there is no denying that Netflix have a lot of competition. They have Prime, they have Disney Plus, they have Paramount. There is a lot of competition in this sector. But speaking from my personal experience as a consumer myself, if I had to pick between having Netflix or having any of the other streaming platforms, I would choose to have Netflix over any others. And if I think that, then I think a lot of other people will also feel that way. And for me, it's because I really enjoy the Netflix original movies, the Netflix original series. I like the interface. I find the interface extremely nice and simple to use compared to others that I've used, and I'm just an all-round happy customer. Now, there was a time when some customers actually opted to have a different streaming membership and not Netflix, or have Netflix plus another streaming membership. And this is because not all the shows that they wanted that were really popular were actually available on Netflix. That is changing a little bit, because lots of Disney-owned shows like Prison Break, massive show, are going to be added to Netflix in 2024. And I think that only increases their advantage, their competitive advantage moving forward. And number 6, we can't really talk about any stocks these days without mentioning this, but Netflix are integrating artificial intelligence extremely well. So many enterprises, so many businesses around the world are looking to see how they can actually use artificial intelligence to increase their business, to make their business better. And Netflix are doing this very, very well. They're using it in many, many ways, from calculating what shows to actually recommend you, to actually using AI to select the best frames within a show or a movie, and then use that frame as the thumbnail that you see. Now, this is really, really smart, because what they are actually doing is picking different frames dependent on the viewer. You and a friend could be looking at the same show from different Netflix accounts, but actually seeing different thumbnails. And that is because Netflix is using AI to know which sort of thumbnails you as a viewer are most likely to click on to keep you on the platform. Let's just have a look here on Seeking Alpha. We can see that the Netflix growth grade is an A-, and their revenue growth year over year is coming out as a B at 6.67%, but their revenue growth forward looking is actually coming out as 10.81%. So this is really, really strong. We can see on the right-hand side here, Seeking Alpha and Wall Street analysts are rating this as a buy. And then if we go across to the charting option here, and by the way, if you want access to Seeking Alpha, use my link in the description below, because that will actually get you a 7-day free trial. So you can try it, see what you think, no strings attached. And if you do decide to opt for it, you get 20% off using that link. I love it. It's what I use for all of my research. But anyway, let's just have a look here. So this is comparing Netflix stock to the S&P 500. I'm sure you know what that is. Year to date, Netflix has actually done really, really well, up by about 25%, outperforming the S&P. Over the last 1 year, again, outperforming the S&P, you can see the numbers here. But if we go a little bit further, what you'll actually see is it's underperformed the index. And that is because in 2022, they had a really, really rough time. But they're definitely coming out of that now, and they're looking really, really strong moving forward. Again, in my opinion, based on my own research. Okay, let's move on to stock number 2. And this stock is one that the market is getting very, very worried about and very, very concerned over. And I've actually seen a lot of people cut their positions in this stock and move that money elsewhere. Personally, I am not doing this with this stock. It's one of my largest holdings. I am going to continue to hold this and actually buy more. If you haven't already guessed, the next one on our list is Tesla. Now, they are one of the only Magnificent 7 companies that haven't really been doing very well over the last 1 year, especially not in just 2024. But that is really hard to stomach. It's definitely really hard to stomach, but this is where your control over your mindset, your emotions when it comes to the stock market really, really come into play. So many things are happening for Tesla right now. Obviously, when we look on our screens, we see the stock price. We often see it going down. Unfortunately, that's just the way it's happening right now. But we must always remember to keep emotions, put them aside, and actually look at what the company behind the stock is doing. And right now, they are ramping up Cybertruck, which is proven to be very, very in demand. There were a lot of people, when we heard about Cybertruck coming out, that were really skeptical. They thought no one's going to want this vehicle. It's just hype. It's not really going anywhere. But actually, what we're seeing is that it is in demand. People do want this. It is, it is one of these vehicles that look very different. It's going to feel very different for a long time, but eventually it will become the new norm, in my opinion. And we've actually seen so many big celebrities buy in the Cybertruck. Now, it's worth saying that they have all been using their own money. It's not been gifted by Tesla. Elon Musk has confirmed that. But what this means, why am I even saying this? Why do we care if Kim Kardashian or Justin Bieber have a Cybertruck, Lady Gaga, all these big names? Well, it's because, obviously, these celebrities have lots of eyes on them. And this is basically free promotion. Tesla's not paying for this. They are getting the biggest promotion in the world without having to spend a single cent. So that's great. But what I want to say here is when it comes to Tesla, and anyone that's been invested into Tesla for, any period of time longer than maybe a year, it really, really, really comes down to understanding short-term versus long-term. Instant gratification, delayed gratification. Those are some of the most crucial things about being a Tesla investor. Now, if you look at the historical stock chart of Tesla, what you'll notice, and obviously past performance doesn't indicate future performance, blah, blah, blah. But what you'll notice is that there's been many, many times before where the stock has actually traded downwards or traded sideways for a very long period of time before anything happens. And then when something does happen, it happens very, very quickly. You'll see sideways for however many months, however many years, and then suddenly it will shoot upwards and it will happen very quickly. But it's the time now, like it has been before when it's hit lows, that you must focus on the company behind the stock. What is the company actually doing? Because eventually the stock and the stock price will reflect the intrinsic value. Well, in the short term, it's definitely been rough. And I think this might continue for a little bit longer. You know, we've had high interest rates. This just means people aren't spending lots of money on high ticketed items like new vehicles because they simply cannot. We've had the recent attacks on the Berlin plant, which is really, really unfortunate. Actually, it's quite annoying. And it just means lower production, possibly lower deliveries, lower estimates, all of that stuff. It should, as far as I understand, be up and running very, very soon, potentially this week, depending on when this video comes out. We've had the bad news in China. It's, of course, an election year, which, depending on which way that goes, could have potentially bad outcomes for Tesla. We'll have to see, and everything's a bit volatile within an election year. But remember, that stuff is all happening now. That stuff isn't going to last forever. That's short term. So we have to ask ourselves what's going to happen in the next 5 years, 10 years, and looking onwards from that. So what do we know about Tesla? Well, we know that they are working on their lineup. They have the Semi, they have the Cybertruck, they have the compact car, and that's all outside of their very, very popular vehicles, their Model 3s and their Model Ys, which obviously are already doing very, very well. Autonomous driving is getting closer and closer. The technology behind that is improving every single day. Tesla have the data advantage they have for a long time. You know, they are solving their bottlenecks needed to push them towards actually making FSD as safe as it possibly can be. And I don't think that's going to be solved by any other company. I think that will be a Tesla win, and I think that it will happen relatively soon. They're nearing a stage where FSD Beta will be able to enter the European markets and the Chinese markets. And then once they solve FSD, the US will be the first market, of course, they can move towards a robo-taxi fleet, which I've spoken about on my main channel. I'll leave that linked up here somewhere if you want to check that out. I talk about Tesla and Palantir a lot on my main channel, but that will be a massive thing. That will literally change an entire industry. Then we have the energy sector, which is growing. People are a little bit bored of the energy sector, but if you are a Tesla investor, look into that. It honestly blows my mind. The numbers are growing at an insane rate and will continue to do so. Services, in my opinion, will be absolutely massive. Do not underestimate Tesla services. Where they are now is not where they're going to be in 5 years. Their services sector, I think, will be bigger than anyone's imagining. They are literally leading the charging hardware, the charging network for EVs. That's a massive thing. Think about if we were saying that one company was dominating all gas stations. I'm British, so petrol stations. It would be massive. Tesla are doing that for EVs, and every other company producing EVs are having to, they're having to literally, because they need their customers to be able to access the Tesla supercharging network. They're having to make that possible for their customers to be able to use Tesla's supercharging network. It's big. It's going to be massive. And then we have their robotics side. We have Optimus, their Tesla bot. Now, this is still under development right now, so a lot of people don't really want to take this into too much consideration when thinking about stock prices and whether or not Tesla's a current buy. I personally do consider this because I do think it's going to happen, and I do think Tesla are going to do very, very well in the robotics sector. But obviously, that's for you. Even if you remove Optimus, Tesla are still looking very, very strong for the future. Financially speaking, again, very strong. They have some of the best margins, even though they get hit quite often. Still some of the best margins in the sector. Their net income is incredibly good. Their debt to cash ratio, insane. And there were people that were buying Tesla when it was $390, $400 a share. And of course, since then to now, people have lost money. But remember, that's unrealized losses, unrealized gains, because unless you've sold out of a position, you've not really lost or gained any money. But those people that were buying at that $400 are very annoyed about it now. But those same people are no longer buying, which doesn't make any sense. Then we have the people that, were or were not buying at 400, whatever, that do see the opportunity and are utilizing that opportunity, making the most of it, and are buying at these current levels. Let me know what you're doing. Are you buying Tesla at these current levels, or are you not? I'm going to be buying it. I have been, and I will continue to do so, because I think this is one of the best opportunities, one of the best companies, and the time to buy is when everyone else is getting frightened. Let's have a look on Seeking Alpha here. So Tesla growth grade is coming out as a B, revenue growth year over year A-, revenue forward growth A- as well, very, very good. We can see the rating summary here. They're all coming out as a hold. Personally, I am holding, but I am also going to be buying. Let's just go to the chart here. You know, if you're a Tesla investor, we've been having a rough time. Year to date compared to the S&P, not doing very well at all. 1 year, not doing very well at all. 3 years, again, it's been a very rough time. We've had this period of the stock trading sideways, trading downwards. We've seen it in the past. But if we zoom out, we can see how well Tesla has done over the long term. And I don't think this will just continue, you know, just like it didn't here and it didn't here. At some point, there's going to be a reversal. No one can predict when that's going to be. So I just like to focus on what the company is doing. Is it currently at a good price? Is it currently undervalued by the market? Are people getting frightened? All of these things, as long as the fundamental company has not changed and does not change, I'll continue to buy Tesla. Okay, so with Tesla and Netflix out the way, let's move on to the last company today. Now, this company is not one that was founded in the US, and it's not one that's headquartered in the US either, but it is listed on a US stock exchange, so we are absolutely counting it in today's video. This company is New Holdings. Now, this is one that I have spoken about in recent videos, but just in case you've missed any of those, this is a company, this is a stock that I am starting to get very, very interested in. I've been spending a lot of time researching them in more detail, because obviously before you add any investment to your portfolio, you add any stock, you must research it thoroughly. Otherwise, you're just gambling. And if that's a pain point for you, if you're not really sure how to go about researching, you don't really have a strategic checklist in place, a blueprint, don't worry, I've got you covered. Have a look in the description below. I actually have a workshop covering everything that you need to know about researching stocks. It will literally hold your hand through the entire process. But yeah, New Holdings are looking very, very bullish right now, in my opinion. And I think this company has been put on a lot of people's radars because of Warren Buffett. Warren Buffett owns, I think, about 3%. I could be completely wrong there. Definitely look that up. Shares of this stock. He's been adding it to his portfolio. And after doing a little bit of research, I think there's very good reason for it. So why has this stock made the video today? Well, it's because this company has achieved impressive financial performance. They have showed strong revenue growth, profitability, and they have demonstrated an insane, crazy customer growth. And they will actually soon have 100 million users. So they've already done well. Great. Are they going to continue? Well, I think so. I think there is so much growth opportunity left as they actually look to expand into new markets. And a lot of people in the regions that they are serving and looking to expand into are still unbanked, meaning these consumers, potential customers, don't actually have a bank right now. And not only are Nubank, the subsidiary of New Holdings, not only are they offering them a bank, but they're doing it in a completely different way. Most of these regions, up until recently, have only had the option to either be unbanked or have a very, very expensive traditional bank, i.e. brick and mortar. But Nubank aren't doing that. They don't have physical stores. It's all via an app. And it's completely different to what the people in these regions are used to. It's so much cheaper. There's a real moat. There's a real, excitement about this. And I only see that continuing. So let's have a look here. We've got revenue growth year over year, beating the other two that we've spoken about today. A plus, 101%, over 101%. Revenue growth forward, again, A plus, 43%, 44% basically. I think there is a lot of growth left in this company. It's very, very early days. Warren Buffett, one of the best investors of all time. Sure, he gets things wrong, but he's definitely seeing opportunity here. And we've got the rating summary on the right-hand side. Seeking Alpha and Wall Street rating this a strong buy and a buy. Very, very bullish. Don't ever go on just what they say. Do your own research, like I said. So New Holdings, year to date, very, very well. Outperformed the S&P 500, which is great. 37% increase. That's a really, really good return. Of course, right now, lots of the AI growth stocks are doing incredible things. So this might feel small in terms of a return compared, but it's really, really strong. If we expand to a 1 year, you can see how well they have been performing. And if you have the growth in the consumers, you have a moat, you're building excitement, you have the earnings, which they had fantastic earnings, and the financials to back it, the stock is going to demonstrate that. There's no doubt. It's just a matter of when. If we expand to a 3 year period, you'll see here that actually the chart only starts in December 2021. That is because of the IPO date, but you can see, since the IPO, a big decrease. That does tend to happen, but it is recovering very, very nicely. But let me know, do you think that this has growth potential for the future? I see a lot of investors are starting to actually investigate new holdings. They are getting excited. They are seeing the opportunities here. Let me know what you think about that in the comments below. With all that said, I am considering starting live streams on this channel. I was thinking about doing a format where you guys let me know what stocks you want me to analyze. I will analyze them live, see what we think about them. It could be fun. It could be fun, but I don't want to do that if it's not in demand, because it is quite time consuming. It's quite stressful doing live streams. If it is something that you want, let me know in the comments below. Just say yes to live streams or something like that. And if enough people want them, I'll start doing them. It should be fun. Thanks everyone for watching this video. Until next time, keep analyzing, keep investing, and don't forget to hit that subscribe button.